Hey, welcome to the Social 333 podcast. I'm your host, Chris Bentley. Today, my guest, Trey Rush. Trey, welcome to the show.
Thank you so much for having me, Chris.
Awesome. So tell the audience a little bit about yourself.
Well, I own Paytech Plus. It's a merchant account payments agency. I've been doing that since 2013. Um, Mainly helping small business owners migrating to the online space and all the cool, fun challenges that come with that.
What, I dabbled a little bit in merchant services. I know a lot of people have like a company like yours and they'll pay somebody like kind of like a foot soldier kind of deal
hmm
where you'll go out and kind of drum up some business. Maybe you'll go to like a dry cleaner or like a small mom and pop or something like that. What kind of got you into payment services?
Well, to kind of touch on that, it goes right back to what we were talking about right before we went on air, which is my life before this. I was in the health and fitness industry, ran health clubs for about 8 years, working 8 to 8, like Monday through Saturday, crazy, crazy hours, very well compensated, but crazy hours. And that opportunity was pulled out from me suddenly when the owner of the business sold it without telling anybody.
Oh wow.
And we went, I speak for myself and about 8 other managers at the time, went from making well north of six figures to less than 50 grand pretty much overnight.
Mm,
And, they're like, congratulations, we sold the company. Here's your new boss. Peace, basically.
wow.
And so that opportunity just the time, like where I was so bad because I just left a really, really good location paying really well because we were operator owners on, on a handshake deal, but we were getting paid on profitability. And, the owner was like, hey, I want to do another the location in Dallas. It's going to make a lot of money. And it didn't. And I was, so bought into the company. I mean, man, I would have done anything this guy asked me because he gave me my shot.
Right.
And so, he's like, I need you to literally give up half your income, move your family across the city and do this location for me. I was like, sure, why not? And it went south and I racked up a whole lot of credit card debt. And when the whole thing went south, it's unlike other employees where I took a pretty substantial financial hit for a while myself, and it took a while to get back, and I struggled for a long time. And luckily, everything worked out. My wife's pretty strong and motivating, and helped me get through that. But it took well over 5 years
Oh wow.
to financially. I mean, like everything but bankruptcy,
Wow.
like everything but.
Wow.
So, one of the other senior managers that was at the health club with me was like, "Hey, man, I got a job at this payment processing firm." I had no idea what it was. It's zero. I mean, I ran credit cards at the gym, but other than that, I didn't know what it was. I'm thinking office space, right? I'm a big movie guy. My wife and I pretty much speak movie lines as like a second language. So I'm thinking office space, which was filmed on 635, by the way.
Oh really?
Yeah. I'm thinking like I'm going to be stuck in a cubicle. It's going to be like this most boring data entry. In reality, it was more like boiler room. It was like this hardcore sales environment, kind of like what you were mentioning to earlier. And I learned a lot of what not to do at this company that I think eventually went under. I got out. I mean, I can only do that for so long
Right.
when it's like sucking your soul because at first you think you're doing the right thing for the customers, but then you learn all the shady things that the industry has to offer, and you find out that your company is just as bad, if not worse, than all the competition that you've been bashing for the last year. And so I got out and took a few other jobs for a year or so, and then went off and started on my own.
That's interesting that you were talking about that because I was, like I kind of started like my own like kind of research and looked into some of that like payment processing stuff, and like I read a bunch of stuff of like business owners where they're like, hey, like I got charged X, and it was like more than what I should have been charged. You promised me Y, like, and then I tried to like complain about it. There was nobody to talk to, or it was great for the first 3 months, and then after that, like the rate changed, or it was a big purchase. And, it was just like a lot of that, and I was like, well, like I have other businesses too. The last thing I want to do is be known for ripping people off, right? Um, Talk about, because I know there's tons of business owners, tons of self-employed people that are watching this, and they're like, they probably were in it, they probably have something, or they like kind of shied away from it. Like, what are kind of like some of the misconceptions? What are the kind of the things that you've seen? I don't want to talk about like the past companies, like because we don't want to get in trouble. But like,
Sure.
what have you seen, or like what have you kind of witnessed that is like unethical? That is like keeping a lot of business owners from being like, okay, Chris, like I like you. I don't know so much about your company that you're trying to pitch me, but like I'm not really interested. Like what is it that's holding a lot of people back?
Well, I mean, you said a lot of it, just bad past experiences. So, kind of how the industry's evolved over the last, 10 years or so, a lot of it was primarily when you acquire a client, you have a few channels you can go through. And the merchant service industry, in a lot of ways, is kind of behind the times. And up until recently, starting to use, like ads and, like modern marketing uh, strategies. But before that, it was like you said, boots on the ground. It was foot soldiers, and it was bank referral relationships. And so the problem with the way the industry was set up is it's very largely unregulated. So it is the wild west, and you've obviously done a lot of really good research because you're hitting a lot of points very accurately, and that there's not a lot that you can do if you get put in a bad deal. And so this is normally what happens. You walk into a bank and you're like, I'm opening this new business. They're like, great, here's your account, here's your checking account, by the way, we do merchant services, call this guy. And it's not really the bank, it's just the person the bank refers out to. And so, but they're like, I trust my bank. I don't know where we got to as a country where like the bank is the trusted guy, but that's a different conversation.
Right.
But that's what happens, and they're like, okay, I get put in this deal, they charge a lot of money. Then some guy calls them on the phone or walks in the business like, hey, I can do better on the deal that you have. Yeah, if you could save me money, why not? And then they're like, sure. Well, what has happened is they didn't read or understand, even if they did read the agreement, they get put in a really bad deal. They go to call the person that put them in this deal, like you said, well, you told me it was this and it's way more than what you thought, or, my funds are being held. Like, what's the deal? And they're like, oh, well, that was a sales guy. He's no longer with us. He quit, because, and he probably found out that they were ripping people off.
Right.
It's not usually the sales reps that are bad people. It's that the processing company throws a lot of like really new people out in the street with very little education or understanding of what's going on. And they're like, yeah, we're going to, save everyone all this money and charge them 1%. And that might be true, like on debit cards, but they forget to tell them that, oh, we're going to charge them 4% on all the other credit cards that have rewards attached to them, which is like 90% of the cards in
Right.
circulation, right? So there's just a lot of like half truths and fake news that surrounds the industry. So um, the issue is that most people that are still doing this on the ground level, like what you mentioned, the foot soldiers, they're just commission sales reps. They're not bad people, but the way it's set up is their job is to go into a business, sell a deal, put meat on the table for their family, and then move on to the next one. They're financially incentivized by a W 2 employer that tells them exactly what they can and can't do. And they couldn't even service the agreement if they wanted to. Like,
Mhm.
their job is to go out and sell, it's not to service. And so these business owners have been abused and put in these cycles of bad deal after bad deal to where like after the third one of getting screwed over, you're just like, I'm done. You know what I mean? Like
Mhm.
it's just not worth it. And so what's happened is disruptors like Square, Stripe, PayPal are like, you know what? We're just going to still charge a ridiculous fee, 3.5% on card not present, but you know what you're getting. It'll be a flat rate. And people are like, okay, well, I'm getting screwed, but at least I know what's coming, and I'm not getting all these surprises and issues the issues that we're used to, anyways. And so that's what's happened. Like these disruptors, like Square, Stripe, QuickBooks, they've brought a modern marketing approach. They've made onboarding very easy, and they've focused on software integrations and things like that. So there are understandable upsides to that, and so that's why they've blown up the way they have. But there's a laundry list of backside problems that can come with that as well.
Yeah, I've experienced kind of both, and that's kind of where I was going to go with it. Is like not only the security challenge, but people like with the chargebacks and stuff like that. I've experienced a lot where, it'll be somebody, like, they wanna buy something online because I have an online store, and then they get the product, and then they hit, like, a chargeback, and then they get their money back, and I have to call, and I'm like, "Hey," like, they got the product, and they're like, "Well," like, they dispute that they didn't or whatever the situation is. Um, Talk a little bit about, like, the security stuff and, like, the customer side of it versus, like, the business side of it and, like, what you've experienced.
Well, this is one of the biggest points that I actually wanted to touch on. And with my business, I tell people that ask me, I'm like, I have an awareness issue. And like, well, what do you mean? Well, there's a problem out there that is just not important until it is. You know what I mean? It's like when it comes to chargebacks and disputes and funding holds and how all that works together. It's like, it's like insurance. You don't need it. You don't need to worry about it until your house burns down, right? And this is kind of one of those scenarios. And I have a few stories I can share if you like, but the main thing that I want business owners to understand is to be aware of their dispute risk profile. What that is, what that means, why it's even important, why they should care. So, I guess the best place to start is to understand processing as a basic function, which is essentially it's kind of like a loan. Okay. So, when you process a transaction through anyone, doesn't matter, but let's use Stripe for example. Let's say it's $1,000 transaction. I pay you $1,000 for whatever. Okay, whatever that processor is, in this case Stripe, is financially backing that transaction. So what they're saying is no matter what happens, okay, they are taking some of that burden of responsibility on that. So in that scenario that you mentioned, let's say I dispute the transaction for whatever reason. We'll get into reasons in a minute, but for whatever reason, I dispute it and I win. Okay. And you as the business, they go to pull that money to pay me back because I won the dispute and it's not there. They still have to pay for it.
Mm,
They are still financially on the hook for that transaction if you as the business can't come up with the money. And so a lot of people don't understand that, right? And so the reason I said that is to because business owners just think it's simple. Well, just the money goes from one account to the other. How hard can it be? Why don't I have my money? What's like? Why do you got to charge me these exorbitant fees? And I can get into fees in a minute as well. But the point is to understand that dispute process as well, like what you said. In that scenario, if I dispute that transaction, the processor is not on your side as much as what you would think, right? So the way it kind of works is I call my credit card company. I say I wasn't happy with service or I didn't get my product or whatever, like you mentioned. Okay, so they're kind of on my side because they issued me the card. I'm their customer, right? And so then they contact the processor and say, well, there's been a dispute or chargeback. We're filing that dispute. The processor takes that money out of your account without warning. Okay. They have to because if they warn you, then you might move it.
mhm,
And they're on the hook for that charge, right? So
right.
they want to get that money when they can. They hold it in a fund until they decide who wins. Guess who makes the first decision on who wins?
I don't know.
My bank.
Mm,
So kind of a conflict of interest if you're on that side of the table,
right.
if you're the business. I mean, how likely, I mean, you could have me dead to rights. You could have a signed agreement. You could have photos. You could have signatures. You could have whatever you want. And it's still not 100% that you're going to win because the bank might just say, well, we're going to side with our customer. And, if they want to take it up the ladder to arbitration, they can. It happens sometimes. So it's, and then on the other side, you have the process. You're like, well, okay, well, if the card company's for the card holder, then the processor's got to be on my side, right? Like I'm their customer. Well, the crazy part is that during that 30 days or 2 weeks or up to 2 months that they're holding that money, they can reinvest that money and loan it out to somebody else,
Mm,
making 14 to 16% interest, loaning it out to another business owner while you are stuck like where's my money?
mhm.
And that risk profile with these payfacts, they can decide, well, we're going to hold that one transaction or we'll hold your entire account until we figure out like what's going on.
Mm.
And that holds people up a lot too.
Talk about that dispute risk profile. Where can somebody find that?
It's it's not an official term. It's just what I reference to make it make sense.
Okay.
So a risk profile would mean like what are some of the factors that a processor would use to analyze is this a business that makes sense for me to process for, right?
Mhm.
Okay, so we'll start with ticket size. That's a really big one. Okay. If you're selling $8 cups of coffee, you're not a huge risk, right? I
Right.
mean, Who's going to spend the time to dispute an $8 cup of coffee? I mean, almost no one. And even
Right.
if they did, who cares? It's $8.
Right.
Now, if it's 800, okay, now we're kind of paying attention. 8,000, someone's definitely paying attention, on that kind of money
Right.
being moved. And not only that, the larger the transaction, the more likely a dispute is to happen just because of the number alone. You know what I
Mhm.
mean?
Mhm.
People are paying attention. And then how it's being taken. Like 90% of all fraud happens online versus if you're chipping a card or swiping it in person, right? So online businesses are just naturally going to be a high risk. Um, the monthly processing flow, like I see coaches getting hit for this a lot, right? They'll run these events where they're like, "Oh, we had this webinar at the end of the month, and we're going to offer everyone a discount on our course or whatever." And then they get 10, 20 sales in like one lump sum. That throws a lot of flags to a processor because, well, what happens if something happens? Like they get half of those disputed, right?
Mhm.
And now you've ran 30, $40,000 worth of charges in one day and no more income for the rest of the month. Like, how do they know that money's going to be there
Right.
if those disputes happen? So it's riskier.
Mm.
And then the vertical, I call them a results may vary type service. So your coaches, your marketers, like your credit repairs, um, anything where it's like, we're going to throw money at this and do the best job we can, but we can't guarantee a specific result. With auto repair, it's like it's either fixed or it's not.
Right.
So it's pretty clear cut. So those kind of things is to take those things into consideration.
What are some of the payment processing, like, options? I know you went over, like, kinda like the core that's I use a couple of those, it's just because like, I'm not high volume enough to do that. But what are some other options? Because 'Cause I've been at and I'll also tell you too, like, we were kinda talking offline about different areas. Like, if I go to Arkansas, like, I have to pay an upcharge for credit cards on, like, every single thing.
Hmm.
And it's gotten to the point now where they're like, "Oh, like, you're paying with credit card?" And they're like, "Oh, you must be rich." And they're like, "Oh," they, like, run it up on me, and I'm like, "Dude, like, why can't you just charge the same thing for everybody?"
Well, and I get that, and that's looking at it from the customer's perspective, and that's not wrong. However, what I will say is because of the risk that I know is involved with accepting a card with my clients, I do primarily encourage passing that cost along
Okay.
as much because and I think it's like up to 25 to 30% of all businesses are doing some form of that now, and it's increasing by 3 to 5% a year. So it's
Mm.
going up, not down. And the reason for that is like when these programs first started getting popular was like 5, 6 years ago, and it was being pitched on savings. Hey, we'll save you money. We'll save you money. And that's cool. That's great. It can't, if you're a business, it's on, running 30% margins and you're saving 30%, that's a 10% actual boost in profit, right? So that's cool. But I actually don't even really like I don't push that part of it right away. It's more about mitigating the risk because if you're accepting a $2,000 payment as the business, you're taking on all the risk and the customer has all the benefit because when they pay you, it's like an insurance policy. They know that their bank has their back for up to 2 months if something goes wrong. That's the benefit that they get. And not only that, they're getting, kickbacks like points, miles,
Mhm.
rewards, all that kind of stuff. Versus me, if I pay you with $100 bills, right? That's better for you. You don't pay you're not paying anything on that. But because I'm paying the same price, essentially I'm paying 3% more, really, because there's a 3% built-in expense that doesn't really apply to me.
So that expense is going for our points, basically.
Right.
So basically, I'm just if they did away with the point system, then I would be paying almost to
They're still gonna. I mean, that's what's I think in a large way motivated the increase in fees that you're seeing because we have the highest interchange rates in the world by like double.
wow.
And the card brands like Visa, Mastercard, they operate on like a 50, 60% profit margin. It's ridiculous, and they own like 80% of the market.
Mm.
So it's almost a monopoly. So I encourage, depending on the industry, I shouldn't broad stroke that. There are industries where it doesn't make sense. There are some luxury, industries like, um, I can't think off the top of my head, but maybe certain doctors' offices that just it would be kind of like taboo, I guess you would say.
To hand over cash.
Yeah.
Yeah.
So it's like
Or awkward.
right. So, but I mean, if you are a A service-based business, especially one where it's like a results may vary, I always encourage to have some sort of difference in price, whether it's, having two price points like a card price and a cash price like the gas station's been doing since the 80s, that's fine. If you want to do compliant surcharging, which there's rules that go with that a lot of people break and they don't realize that they're breaking them and they don't realize they can be fined because of it, which is you have to have a software that automatically adds 3%, it's capped at that, and doesn't add it to debit cards. So that's a kind of like an in the middle option where it's like, well, if you want to pay with credit card, you're going to get the 3%. But if you pay me with debit card, to your point, because there's not really any rewards attached to it, it's cheaper for you, the business. You can offer a way to pay without a fee and still accept cards. But I'm not paying for your vacations anymore.
Yeah. Yeah, I've run into that, and, like, the thing that gets me is that I just wish it was, like, the sign wasn't there, because then I feel like I'm ripped off, right? So I feel like, okay, well, like, if I had gone to the bank and got a crisp $20 bill, walked across the street, and given you $20 for that $14 sandwich or whatever it is, because food's gotten outrageously expensive,
Mm-hmm.
right? So I pay for, like, $14 for some bread and some meat and some salad, right? And then I go and I pay that money, and then you're like, "Okay, cool, here's your $6 back," and I'm like, "Okay, great," and I walk out the door, versus it being like, "Okay, well, it was $14, but now with the fees, like, now it's like,
Well,
15 and some change."
And that is the reason why I do a lot of compliance surcharge, because in that case, a very large percentage, and I don't have a stat to give
Right.
you, but I would say it's probably 80% of people that carry a credit card probably also have a debit card in their wallet. So it still gives that choice where it's like, okay, we'll pay with debit card. You know what I mean? Like
Mm.
if you don't want to pay the 3%, that's cool. Just use the debit card in that case. And then you don't have to worry about the fee. And that's why a lot of my clients like that kind of program because it still gives them some flexibility.
And you don't have to look awkward, like, carrying a bunch of cash.
Exactly.
Right. Talk to me about crypto. Is there gonna be some sort of movement into crypto? I know right now it's kind of like that still awkward phase where they're still trying to do different things with it, and they've been trying to do different things with it for years. Like, do you see? I know it's popular in the Philippines and some other areas where they just pay with crypto. Do you see that kind of being like a trend or something coming up soon with that?
I think that I think it'll take a chunk of the market. I just don't think it'll be as big as what everyone thinks because it's like cash, right? I
Right.
mean, it's digital cash is what it is, right? And so there's a reason why plastic has eaten away at cash transactions every year since its inception, right? Because of the convenience factor of it. Well, with crypto, there's still no protections behind it. The reason why people like their plastic is because the rewards that come with it and the security and the insurance that comes with it, right? It's a reason why they pay Samuel L. Jackson to do commercials to say,
Right.
"What's in your wallet?"
Right.
Right? It's the banks have to use that as a way to get customers because what else are they going to do?
Mm-hmm.
That's a very heavy client acquisition channel for them is opening up credit cards. So I think there are some gateways that are playing with it, but it's like you almost have to be an exchange at that point, right? Because it's
Right.
going up and down so much. So I don't see it being like a normal everyday form of payment for a while, and I definitely don't see it overtaking, plastic at least not in this next upcoming decade. I could be wrong. There could be some breakthrough. I'm not a crypto expert,
Mm-hmm.
but there's just, I mean, the benefits of crypto are also kind of the weaknesses in that point, and where it's like it's a done deal. There's no way to take it back. It's same as cash almost. So I think it'll be a factor. Everyone said the same thing about like Zelle and Venmo, and when
Yeah.
all those. I mean, you don't see those being taken at Walmart for a reason.
Mm-hmm.
So I think it'll be out there. I just don't think it's going to be a monumental impact.
Tell me about like a success story. Like, do you have something that's like something went crazy, you were able to save it, or it was like, I don't know, high net worth individual, baller, something
Well,
like that?
I got a couple stories. The
Okay.
first one kind of circles back to what we were talking about before. I have a contractor that I'm working with. I'm going to be acquiring as a client. We're kind of in the process, having to help them work through some things first. But they were using a software that used Stripe as an integration. So, kind of going back to the whole Stripe thing, what they did really well is they marketed to softwares, not individual businesses, right? So we're going to work with the software company, and then we get all the customers if they come on with the software, right? Okay, so it was a contractor. They did a bathroom job. They agreed it's going to be $15,000 to redo this bathroom. So it was a higher, net individual. And they're like, okay, well, we'll break it up into three payments. The first one, 5 grand, be for materials, get us going. Okay. So then a couple weeks later, the next $5,000 installment came out. Around that point, they were like, well, we want to make some changes. We want to actually do it this way instead of, I think it was something to do with the shower. I'm not sure. Um, and they're like, well, that's a change order. We can do that. We'll have to quote that out because it's going to be more expensive. And I think it was a $3,000 difference.
Mm.
So keep in mind, they're halfway through this job. There's stuff torn up everywhere. Okay. And they're like, well, we don't agree to that price. That's too much. We don't think it should be that much. They're like, well, I mean, that's what it is. They go back and forth. Well, they were like, well, we can just stick to the original contract. They're like, no, we don't want that. We want this. Well, it's going to cost this in that case. So there was, they were at an impasse.
Right.
And so they basically kicked everyone off the job site, took pictures of everything torn apart, sent it to their card company, and disputed the whole thing.
Mm.
Right? Like, they didn't finish it. Of course, they didn't tell the whole story, right? But they're like, oh, they didn't finish it. They didn't do it the way we wanted. We were unsatisfied, because everyone tells the truth, right? So a week later, this contractor notices 10 grand getting ripped out of their account. Well, they had payroll coming up in a few days on a Friday. You know what I mean? And they had paid for $5,000 worth of materials, and so they're kind of upside down on this thing now. Well, that put them in a real hard spot. So going back to those risk factors, one I didn't mention was the size of the transaction versus the monthly revenue. This contractor usually does about $30,000 a month in cards. So $15,000 job, that's half of their monthly revenue, right? So to the processor, it's in this case, the processor was able to go in and rip that money out, but the likelihood is less if they're doing a very large transaction in ratio wise to their normal monthly revenue. In this case, it worked. They went out and ripped out the money, but that really screwed over the contractor, and now they're like, well, what do we do? And so the only thing we can do at that point is put better systems in place, clear terms and conditions, better agreements that are signed, having a clear dispute process in your engagement letters, in your contracts that explains if you have an issue, this is the process we're going to go to. You have to give us 14 days in writing to fix the problem. From there, another 15 days to actually fix it, right? You have to report it in 15 days and another 15 days to fix it. Something along those lines. I'm not an attorney. This is not legal advice.
Right.
But you get the idea. And what that still doesn't protect you 100%, but it does give you a lot better leg to stand on when it's reported to, the processors and the card brands that are going to end up looking at it. Having an agent that knows what they're doing in these situations, that can look at your situation and say, yeah, we should, you should appeal this. Because what happens is if you lose that first round, and a lot of businesses don't understand that, you can take it up the chain to the card brands, but there's usually between a $200 and a $500 fee associated with it if you lose. So it's kind of a gamble, right? It's almost like being pot committed, right? In poker, I don't know if you play poker, but it's like if it's would you risk $5,000 or $500 for a $5,000 transaction? Yeah, probably. I mean, if you have good documentation, you've built a good case, you have good photos, you have the card holder signed, like you have everything in order. Yeah, I'd roll that dice. Now, would you do it on a $200 transaction? Maybe not.
Right.
So, that is putting those processes in place, moving forward, they're going to be a lot better protected. Another success story is kind of like I alluded to earlier, like early in my career, I was one of those, foot soldiers going door to door. I was sold a story, or I guess a narrative would be a better way to put it, that small business owners get ripped off more than anyone else. And I think that's still true up to a point, but that point is just much higher than what I thought. I thought that if a business was doing, $50,000, $100,000 a month in cards, that these processing companies would value that size of account and maybe treat them a little better, give them better rates, kind of take care of them. Not the case. Man, I've gotten some statements, especially recently, doing $250,000 a month in cards. I have another one doing well north of $500,000 a month in cards. another like a contractor, and their rates are astronomical.
Mm.
It's insane. I mean, they're overpaying by $3,000 a month, $5,000 a month sometimes, just in pure BS overages.
Wow.
Just they've stayed with the same company for years. They don't have an agent on the account actually looking at it. And so the company's just been perfectly happy increasing those rates twice a year
Mm.
for a decade.
Mm.
And it's the frog in the pot,
Mhm.
right? They're just slowly boiling to death, and it's opportunity cost that they don't even realize is there.
Wow.
So I've seen some of those recently that we're gonna save some businesses quite a substantial amount of money.
That's great. Yeah, that's awesome. Trey, thanks for coming on the show. Where can people find you if they want to get more information about you and your company?
So I have a website. It's going to be revamped here shortly, but I can still be contacted there. Paytechplus.com, just like it's spelled, PAYTECHPLUS. I'm working on my LinkedIn presence as well. So you can find me on LinkedIn, Trey Rush, Trey, last name Rush like the band, RUSH, would be the two best places.
Awesome. Well, Trey, appreciate you coming on the show, driving out here. I appreciate it. You have a great day.
Yeah, absolutely. You too, man. Appreciate
Awesome.
it.
Awesome.